and now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So of this regression trend to the downside, we had seen two hits, tweezer tops on the daily time frame to hit the top of that channel. Are we coming back down to the middle or the equilibrium point of this channel and seeing a bounce off of that, or coming all the way down to the bottom of the channel on this Coinbase chart? This is also a rejection of the 0.5 equilibrium of the mean reversion path to the upside of this pitch fan we've had price trapped in since January. And interesting to note, the point of control of this previous 60-day consolidation also lines up with the golden pocket of this impulse to the upside on the daily time frame. Previous point of control breach up here and didn't even make it up to the top of the next 30-day point of control here. let's go ahead and take a look at high block. Now, what is high block? Well, people lock their liquidity in the charts to get burnt to a crisp. And we get to see where those crispy characters lie in wait and or get burnt up already. So let's go do that now on the 1 minute time frame. Shout out to everyone here. Welcome in to the show. All right, on the 1 minute time frame, the CPI data came out around here. It pinged in some liquidity on both sides. There was more to the downside here in the amount of 101 million. If I could just get it really quick, let's zoom in. There's more pinged in on the 101 million here, and they spiked it up, took up the shorts, and came right back to take out the 100x longers.
Fatality.
And that's what happens when you don't pay yourself. And they were in profit too. And they came back, reclaimed that, came back down, ate a little, gobbled a little bit of 50x, and stabilized back to equilibrium as if nothing happened. What do you mean we gobbled up these guys? What happened? What are you talking about? That's just a wick. Don't mind it. And they just came and gobbled up all those guys down here. Let's see how much in the amount that was. There was some 11 million, 69 million, 20 million, 47 million, all stacked up nicely there for them. 47 million, 67, yeah. So that's what they gobbled up there. Are they going to continue lower, or are they heading higher to get this 83 million 100x pool of shorts at 29,558? As it stands right now, there is that enticement of liquidity, let's say, more above in the tune of $40 million up at 29,558 as opposed to down below. But the overall thickness of the bands down here, 151 million down at 29 even. If they break back down entirely and come and grab this $151 million 25x character and all their partners in crime, especially this 153 million at 29,204. Let's go ahead and expand our vision to the higher time frame of the external liquidity range. As it stands on the 7-day time frame, it is very clear the imbalance is to the downside. Let's zoom in to show you that now. As you see, there is 4 billion down at 28.6 and 3 billion at 28.650. So a good 10 billion in this range here down to the 28,500 range, and not as much to the upside after previously clearing this pool here at 30,001. So they go up to go down, and they go down to go up, and now are we going down is the question. Let's go to the 1 month time frame. 1 month time frame also saw this tune of $30 billion just about taken out here at 30,003. Are we heading to the 30,005 double-digit number at 13 billion up there, or are we going to head back down into the 28K range? As it stands right now on the monthly time frame, let's get out of this. On the monthly time frame, it looks pretty even Steven, although there is a slight imbalance to the downside. If we start heading back down that way, I wouldn't be surprised. Because if you expand your vision to the 3 month time frame, you also notice that there is larger pools down below at that 24K, sub 25K region, 24.8, 24.6. Also insinuating that move is the 6 month time frame with that large band down below 25K. As you expand your vision to the 2-year time frame, you will notice what marionette strings lurk above with the tune of $600 billion all the way up to 33.2, tapers to 100 billion pools at 33.6 and 34 even. So overall $800 billion just chilling up here, hoping for downside. So at some point, do they get their fill off of the 100x, 50xers and come back up to this? I have no clue. But as you also see below, there is $241 billion down at 24.4. I believe these are leveraged amounts of money, so it's not actual 241 million, or billion rather. It's the amount times whatever leverage they use, but still, that's the amount they're meant to pay them if they go up. So it starts to register as a heat signature. So at some point, it's interesting because people were calling for 40K. I remember when people were calling for 40K back in March, and I was like, I'm not seeing the liquidity to justify it. Like, it only had us up to 31K, and then sure enough, it went to 31K and came back down. So unless there's a path to that upside, there's no reason for them to go to the upside. And it's very interesting if you look back on the 2-year time frame, the amount of liquidity that's pinged in recent times since October, let's say. There's more interest in liquidity being generated here than back here. I don't know if that's because high block is new. I only started getting it from January, so it could be that the amount of information populated after January is greater, but I don't see as much liquidity on this 2-year. They also lost the 2 years prior, so that could be it too. It's generating all of this information into here. But just interesting to note that the pools exist on both sides, and you're caught between a rock and a hard place. There's more within a smaller frame of reference here up in the 33.2 region than down below, so I don't necessarily think that you would go all the way down to 24K, but anything's possible. I remember it dropping 10K in like 10 minutes from 52 down to 41K, so anything is possible. Looking at the monthly time frame with that even Steven ambiguity, we have down here that 14 billion at 28.1, 9 billion 28.3, 12 billion 28.4. Are we heading in this direction now is the question. Let's go into the regular Binance chart and see what can be done about this and what is. So previously on the stream, just to recap, we drew this fair value gap here off the wick of this hourly drop down. We came back to that with with a accuracy untold, and then came back sharply out of that. And that is how fair value gaps are recovered, my friends. So that was the CPI data release, came up here, faked out the bulls and took them to the downside. So this is looking more and more like a B, C wave to the downside. Also, one way to do this on a small scale, we had this previous impulse retrace idea with the bullish projection where we went up to that 1618 region of the bullish trend-based fib level. Now we could do the opposite because we have only mustered this impulse retrace idea here. So the 29,546 level being held here projects us down into these regions here at 28,945 and 28.6, and the Hail Mary down at 28,458 if these levels are maintained. So this also lines up with the levels we are currently experiencing from that previous impulse retrace idea, which did play out. I'm gonna just, this was held so well, I don't know if I want to delete it just yet, because that 236 down to the 1 was just so perfect, that, and a reminder of the 6.5 resistance and then the 706 trapdoor that opens. This is just a perfect idea of how trend-based fib levels work. So on a smaller level, you could do this in the minutia here. If you hold that 236 level at 29,546, you could be coming down to these regions. Time to throw on the oscillators. Also, we had that retrace idea in mind where we were talking about how if it were a genuine possibility of coming to the downside and returning back to the upside, you would see more of a reaction on the 618 if it wasn't V-shaped. So this is not a V-shaped retrace idea, so are we going to see a reaction off the 618 to come up here? Interesting concept nonetheless. So we'll just remove that for now and keep it cleaner and throw on our oscillators and see what can appear. Link in the description for more, of course. Scroll down to features, toggle at your leisure all of the indicators or highlight each component as we go over it. Right now, the trend cloud, which is a volume-based Heikin-Ashi formula, is looking like it's finding some support as of this moment in time off of the 4-hour cloud. Let's go to the daily time frame and make our descent through the time frames. Got that rejection off of the cloud. One thing to note off of the daily cloud as of this moment is this insinuating curvature. Are we starting to see a potential shift on the daily time frame cloud here? The thinning is also interesting to note. It was thicker back here. This stab up with the tweezer tops causes this momentum to shift. Are we going to get a push up in that region? Let's go ahead and take a look at the oscillators. The KD lines crossed over the last 2 days, but that could just be a pause as it does in the past before continuing higher. Not yet overbought. The money flow in the RSI and the daily time frame is paused at the 50 level. The Williams starting to open up here with the golden light potential did provide you with a upside stab to the upside. Is that a sustainable one? Let's go to the lower time frame to find out. First, let me see if the 3-day closed recently. Yes, it did. The 3-day closed yesterday with that suppression we talked about to look out for. This cross down event back in July 24th, we've seen steady suppression. The 3-day attempted to take off here, met with sell-off suppression on this cross down event. This was the thing we were talking about back here in April 16th, and this suppression of the cross down event on the baselines. What are the baselines? Well, they're your first sign of reversal. So these baselines on the 3-day time frame ended up crossing on July 24th, and we've been seeing slow suppression of the price since then. If you could close out candles above the baselines, you could start to make your narrative shift out of here. And yeah, that's one thing to note on the 3-day. 3-day is reset stochastically, and you are getting the money flow beneath the RSI here, starting to insinuate a push up at one point. When that happens on the 3-day though, even if you have it down in this region, it could come a lot lower before that curveball is pitched to the upside there. So this could be a building of the money flow coming back up here. If you look at the 22-hour, 22-hour time frame is starting to show some potential. All the KD lines, money flow, and the RSI pausing at 50, just like the daily time frame, attempting to potentially come up here. The cloud shifting in a manner here on the 22-hour, getting thick, and this curvature also possibly insinuating continuation. Just looking at the momentum only, not thinking liquidity at all. Same thing with the 12. The 12 and the 22 cloud is very similar in the sense that the angles in which they're curving and this thinning kiss to the upside, it didn't quite come down to the cloud just yet, so I would expect another stab down here on the 12-hour time frame. You are at the 50 level. The money flow is above the RSI, so you could get another dump down and hard reset of the 12-hour time frame from this point. Not my point of interest to buy that at that ambiguous level. The 6-hour we were talking about the other day, the last post we updated to the group was the thing here. We were talking about the 6-hour cross down event. When you get these cross down events, you need to watch out for them. Similar with the cross up event. When you cross up and you have a 6-hour candle close above that cross up, boom, you can see upside inbound. And same with the cross down event. You get the cross down with the base with the price action beneath the baseline, then you could basically see some downside from there. It did go up before it went down, but ultimately maintained the baselines. So as you maintain these baselines to the downside and the price actions beneath the baselines, downside is inbound. Super trend holding from the 6-hour since August 2nd. You got a wick off the super trend here, and are we going to negate that by going through this golden pocket? Cloud on the 6-hour also already received a kiss to it. 6 hour broke the 50 level, so could be coming down some more. The money flow and the RSI stabilized as of this moment. The Williams and everything still could take its time to go down some more. What are we seeing right now? Why are we seeing this pause? Well, as we go lower in the time frame, the 4 hour time frame has reset completely. The money flow has come beneath the RSI here. Looks like the 4 hour time frame wants to throw a wind up pitch with the bounce off the 50 level on the Williams, and this stochastic and money flow getting into a zone on the 4 hour time frame reset. 4 hour cross down event also had you at hello back on Thursday my time, Wednesday for the Americans out there, and it's been suppressing the price ever since. So until you can maintain above this first baseline, it's still just a suppression on the 6 hour, and this is what causes false takeoffs, these baseline not lined up properly. Having the baselines beneath the price and having candles close with that cross up event is where you consider going long. So this is not where I would consider going long. Personally, I would be looking for more downside and that scooping up with the baseline. How does it scoop it up? Well, similar to if we go to the hourly time frame here, so it scoops it up in a manner here at this kind of 35-degree angle. Let me make sure that's actually like 35 degrees, close enough, 40 degrees, 38-degree angle. It scoops it up, and the price starts to close above the baseline and react off of the baseline, and you see the color change here. This is why I drained the candles of color, because the baselines are of more import. Same with here, you have the angle and the candle closed above this baseline. That was your clue on Wednesday, August 2nd, and boom, to the upside. So the hourly time frame is where it starts to begin, most likely, and you start to see these baselines hold, and then the hourly play is inbound. So we got some previous bullish divergence on the money flow and the RSI, not even previous, it is happening as of 3 a.m. my time, 2 a.m. So are you going to see the thick cloud though on the hourly time frame? Previous rejection off the cloud, hard rejection off the cloud, also happened to be this fair value gap that we put out on the live last time. So coming up to this cloud and rejecting and maintaining this bearish super trend level, still hard to round out the bottom just yet. This is Run for Profit Friday, so everyone will be considering taking their profits on whatever position they're in. So this previous stab to the upside as of this moment in time is just appearing as a stop loss hunt to the upside for the shorts, and potential. They're in no rush to drop it by the looks of it. I think the funding rate is negative for the longs, so the longer they keep the longs in hope, the more they're getting paid by the longs, on top to adding insult to injury to liquidating them anyway. So the thick cloud here, not insinuating upside just yet on the hourly time frame. You'd want to see this angle with the price closing above the cloud. So this is not where I would begin to look for a long position. We could be seeing this false takeoff here and then come back for a double bottom as the higher time frames bleed through. 4 hour time frame getting oversold to a point here, wants to take off, but the Williams could suppress it here. If we go to the 15-minute Asian range, 15-minute overbought. Attempting to, you got some previous volume come in here with a stopping volume candle, and then now we're reversing out by the looks of it. Williams overbought as well. So had the cross up event here, baselines were holding as of 3 a.m. my time, coming back up, now starting to cross back down again. price beneath the baselines could be getting this 15-minute reset here off the Williams 2. Cloud beneath the 15-minute here. So the 15-minute and the hourly and the 4-hour are getting ready to, with the 5-minute, you're trying to get 4 time frames aligned here. So at some point you had a previous 3 time frame alignment which pushed you up for just algorithmic bounce there. Are we going to see another potential bounce off of that? We wicked down into this region at that previous liquidity grab we joked about earlier here. And are we going to go lower? If we just zone into the liquidity right here on the 1 minute time frame, there's just thicker down below here. We talked about that 151 million at 29 even, and their partner in crime at 29.2, 153 million. So you got $300 million down there just chilling, and not the same amount up above. You do have that 83 million pinged in to the 43 million in long, so there's a $40 million disparity between the sides to the upside here, but there's also that disparity back here that are currently underwater. So who is underwater and who are they targeting? Even though they look like they're going sideways, it looks like they're going to these characters down at 29K. And that could be the rounded top trap that they're building. You round out the price action and take it down. Let's go ahead and look. We're going to take it to the total and see how the total is holding up. Okay, so we talked about the total coming down to the cloud and then bouncing off the cloud idea. This was a few days ago, so it's interesting how this basically filled out that nicely. And that's what happens. It comes down, bounces off the cloud, and the math adds up. So we're getting this slight bounce off of the cloud formation. Is that a 4-hour cloud? It looks like it might be the 6. Yeah, it's the 6-hour. So the 6-hour angle that we are seeing here and the thinning, we're seeing this. If you want to see a continuation, you get a kiss to that cloud on the 6-hour time frame. So the 6-hour time frame is coming down here to the 50 level. Are you going to get a hard reset of the 6-hour on the total market cap for cryptocurrency? The cloud is much smoother than Bitcoin because it is all of cryptocurrency combined. You do have that cross down event to mind. Here you had the cross up event and it maintained itself. There were less fake outs than on just Bitcoin. So looking at the cross down and cross up events on these 6-hour time frames for the cryptocurrency tend to have less false signals. And if you look at it now, we do have the price action beneath that. So are we going to get this maintaining of the cloud on the 6-hour time frame? The thinning is also seeming to do one of these dealios where it goes up and comes back down again. Could this be a thinning before it comes back down? Going to the 8-hour cloud, also attempting to maintain here, curvature looking nice for that idea of thinning and going higher, reversing if you will. Like seeing this, there's less false signals on the 8. You got that one false signal here where it curved down and immediately curved back up. Here just curved straight down, and now we're starting to curve up again on the 8-hour time frame. So the 8-hour time frame looks like it is a more stable signal of the cloud here. Curve down, curve up, curve down, up. That was one false signal. You have a false signal here, false signal there. Here's where it started to get ambiguous back in May. Let's go to the 12-hour time frame, see what the 12 hours up to. We're beneath the cloud on the 12-hour, and it is also thinning in a manner here. Starting to see this curvature beneath the cloud. You haven't gotten the cross down events. This cross up, this alignment was a good potential idea in retrospect on the long potential. Daily time frame cross-up event is in play. Cloud starting to turn on the daily. This pause for the KD lines, is it going to go higher? You're currently beneath the adaptive trend adaptive moving average, the TAMA. So are we going to see this continue lower? As it stands right now, you are reclaiming these as support potential to break out into this pocket. Needs to close candles above this 236 at $1.156 trillion. If it can close a daily candle above that, then we're in business for these regions up above. Until that time, we're still looking at targets down below. 4-hour time frame. 4-hour cross down event competing with the cross up of the daily. You have hidden bullish on the money flow here. Normally that triggers a stop loss hunt and then you're out. But interesting to note nonetheless, you do have a hidden bullish divergence on the money flow. Lower low on the money flow, but higher low on price action, insinuating strength on total on the 4-hour time frame. Cloud bounce idea. Hourly time frame. Hourly time frame also had hidden bullish, or not regular bullish divergence on the money flow and the RSI. Trigger money flow above the RSI, getting that stop loss hunt potential to come down for one more stab, perhaps. Asian range hand 15-minute overbought on 4 time frames as of the stochastic array here. So getting a hard reset of that 4 time frame overbought nature. How does this juxtapose with the dollar right now? So the dollar getting held as the thing that always reverberates from the last FOMC meeting was them cashing out their positions. They said the Fed would be liquidating some of their positions to insert into the dollar. So when I see these dollar spikes go up, I imagine that they're taking profits on things like Nvidia. And these 4-hour candles to the downside are the Fed taking money out and putting it in to the dollar here. So these 4-hour up candles coming from your down candles on these other assets. So trimming profits. They said they would be taking profits and not raising the rates next September, but they would reserve that right. But they said they would be liquidating some of their positions. So the reason why the pause on the upside for the markets could be they're taking their profits and putting it to maintain stability for the dollar. We already assumed they do that with confiscated Bitcoin and things like that. So they openly said that's what they would be doing amongst all the gobbledygook answers. So this is the bullish trend-based fib level coming up to the 1 level and getting a hard rejection 3 times now. If you're going to break above and go to reclaim the range high here, it would have to go up some more. As it stands for the dollar, the 4-hour time frame upwards momentum is in play. 6-hour time frame also attempting to maintain ambiguousness as it goes up. 12-hour poised in a manner here. The cross down event could suppress this for a hard reset, but with that last 12-hour candle, looks like it wants to continue up. Going to the daily looking to have a double top potential. The momentum on that rising sun back here for this double bottom we had you for. That double bottom rising sun idea looking to play out. That is a true momentum thing. Seeing this angle of the rising sun and then it goes up with that type of fury behind it, that's better than this ambiguous takeoff. But the ambiguous takeoff also took off here back in April. So these golden light rising sun cross-up potentials are what you're looking for on these higher time frames across all assets really. But yeah, that's what you're fighting off on the upwards path since basically July 19th. So are we going to reclaim and touch this range high at 103.421? It could be entirely possible as things start to take a bleed to the downside, as Apple took a tumble over the last few days, of course. Tesla as well. Google ironically rose up. Nvidia took a slight tumble. Netflix took a tumble. Gold, let's look at gold. Gold also getting that cross down event, now reaching a rocket ship. Are they going to reposition back into gold? You got a rocket ship on gold, also coming into the golden pocket for the second time. Let's get out of the oscillator B and take a look. What is this retrace path that we have here? The 618 at 1900 saw a previous reaction on the daily time frame. Are we going to get another reaction down here, or a deeper retrace into the 0.65 at 1890 for gold? We previously had a nuke that played out on the daily time frame as well, so these indicators are accurate for other assets as well. The nuke played out because it stretched all the way to the daily time frame and closed with that nuke intact, so that exhaustion was real. And this bullish trend-based fib of this impulse retrace idea set the math up into motion at the 0.76 here, 786, and then rejected off of that. So now coming back into the impulse, if we move this up more, this is going to be a deeper retrace, but I consider this to be the impulse, not this retrace impulse continuation. So I stopped it here. We'll see if that math is accurate later. This also lines up with the 236 retest of the bullish trend-based fib level. So if we're continuing to be bullish for gold, coming down to this region would make sense to clear out this range and reclaim some of this vector too. So gold setting up for some sort of play to the upside. And the last 2 days of Bitcoin coming to the downside, retracing to what is in the cards for Mr. BTC. The hourly time frame looking to get suppressed by those 6 and 12 hour time frames, and the 15-minute reset inbound right now. Let's see if you guys have anything you wanted me to look at while you have me. Anyone? No? Okay. So, a cross down event on the 15 is inbound, coming down with the Williams event here. Could be coming down further for that 15-minute play. The cloud on the hourly suggests that you're coming down further and harder for this last leg down and coming down into this region. The liquidity also suggests that on the 1 minute time frame. We talked about that 29K 151 and 29.2 153 million, $300 million down there chilling in weight, currently imbalanced by 5 billion on the 1 minute time frame. Also imbalanced down to the 28K range, even Steven on the monthly, but as you go to the 7-day and above, you start to see that there is a slight imbalance to the downside, all the way down to 28.6 on the 7-day. So I'd expect a little bit of a retrace here, coming down into the golden pocket, looking for a reaction off of that. We're going to remove this curvature. We already saw that that was the case. And we're going to say that it is going to go down to this pocket and look for a reaction off the 0.66 or a deep retrace of some kind, and then potentially see where that goes by tonight for New York. So will London take you down to this region? All right, ladies and gents, that's my story and I'm sticking to it. Watch for the reaction off this impulse retrace idea. The impulse to the upside, the retrace would have you down at the 618. Do we have a reaction there, or are we going to continue lower? If we do a point of control here, that is a point of control for this range down below at 29,177. So do we also have a reaction off the point of control below that? These are your levels, and that's my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.